What if I told you there are two stocks trading right now on the US market under $15 a share that could be the Amazon and NVIDIA of the next decade? I'm not talking about companies you've heard 1,000 times. I'm talking about two small-cap powerhouses that Wall Street is quietly starting to load up on, that have signed jaw-dropping deals in 2025 and 2026, and that most retail investors have completely missed. Today, I'm breaking down both stocks, the company behind them, the deals they're landing, their current price, analyst targets, the risks you need to know, and my take on where they could be in 5 years. Stay to the end because the second one especially is something special. Let's get into it. Stock number 1, SoundHound AI. SoundHound AI provides independent voice artificial intelligence solutions that enable businesses across automotive, TV, IoT, and customer service industries to deliver conversational experiences to their customers. Think of them as the voice AI layer that powers the companies you already use, but most people have no idea SoundHound is behind it. This is the classic picks and shovels play in the AI gold rush. SoundHound's namesake app can identify songs by hearing just a few seconds of recorded audio or a few hummed bars. However, most of its revenue and growth comes from Houndify, its developer platform for creating customized AI-powered voice recognition services. It's a popular choice for restaurants, automakers, retailers, and other companies that want to build their own voice-activated services without sharing their data with a tech giant. That independence from big tech, that's a moat. Companies don't want to give their customer conversation data to Google or Microsoft. SoundHound is the alternative. Recent performance and revenue. Record 2025 revenue nearly doubled year over year, with Q4 up 59% and over 100 new customer deals. That's not a small bump, that's a company in acceleration mode. And looking ahead, strong growth across automotive, enterprise, and restaurant segments with 2026 revenue guidance of $225 to $260 million and a focus on profitability and operational efficiency. To put that in perspective, $225 to $260 million in projected 2026 revenue from a company currently valued at around $4 billion. That's a sales multiple that's actually shrinking fast as the revenue grows. New deals, the catalysts. This is where it gets exciting. Let me run through the recent deals quickly. Casey's General Stores, the third largest convenience retailer and fifth largest pizza chain in the U.S., extended use of SoundHound's AI-powered ordering agents, which have already handled over 21 million guest interactions. 21 million interactions. That's not a pilot, that's scale. Associated Carrier Group. This collaboration plans to roll out SoundHound's AI platform across a wide network of smaller telecom operators. This expands SoundHound beyond restaurants and cars into telecommunications. Qualitas Insurance. SoundHound is deploying AI voice services for one of Mexico's largest auto insurers, showing their global reach. And the biggest move, SoundHound announced an agreement to acquire LivePerson for $43 million in equity. Management is now guiding for $350 to $400 million in 2027 revenue, with about $100 million of that tagged as growable contribution from long-tenured LivePerson customers. The all-equity LivePerson deal, plus $74 million of LivePerson cash, gives SoundHound scale, a deeper enterprise footprint, and more data to train and deploy its agentic AI. Current stock price and analyst targets. As of early May 2026, SOUN trades around $9 to $10 per share. SOUN stock has a strong buy rating. The average price target is $20.14, with a high forecast of $25 and a low forecast of $16, representing over 100% upside from current levels. And Wall Street expects significant upside, with the highest price estimate of $26, indicating a possible 130% rally over the next 12 months. The risks, be honest. Now, I won't hide the risks from you. SoundHound is not yet profitable. It's trying to expand into a one-stop shop for agentic AI solutions, but that expansion will require increasing its headcount and ramping up data center spending, making it harder to stabilize margins and narrow losses. The stock is also volatile, beta above 4, meaning it moves 4 times the market. This is not a stock for people who can't handle swings. 5-year outlook. If SoundHound captures even a fraction of the enterprise voice AI market, which is projected to be worth hundreds of billions of dollars, this company could look like early Salesforce. The LivePerson acquisition pushes their 2027 revenue target to $350 to $400 million. If they hit $500 million in revenue by 2029 and the market reprices them at 15 times sales, we're looking at a $7.5 billion company, nearly double today's market cap. And the bull case? Much higher. Stock number 2. Ondas. This one is flying under the radar in a very literal way. Ondas Inc. provides private wireless, drone, and automated data solutions in the United States and internationally. It operates through the Ondas Networks and American Robotics segments. It designs, develops, manufactures, sells, and supports full-max software-defined radio platforms. Think autonomous drones, AI-powered defense systems, and next-generation industrial wireless, all in one company. This is the defense tech play for the autonomous warfare age. The company specializes in autonomous drones and automated wireless data solutions that can transform traditional industrial operations, monitoring, and safety procedures that once required boots on the ground. The company estimates its offerings address a combined global market of $130 billion. $130 billion addressable market, and they're just getting started. Revenue growth off the charts. Let me hit you with this number. Ondas delivered 605% revenue growth in 2025 and raised its 2026 revenue outlook to at least $375 million, driven by 5 strategic acquisitions and strong demand in defense and ISR markets. 605% revenue growth, not 6%, not 60%, 605%. That puts it in a category of very few companies on the entire U.S. market. New deals. Defense contracts are rolling in. This is what separates Ondas from a typical hype stock. They're landing real government and defense contracts. A $50 million tender award is part of a $1.7 billion Eastern Border Security Barrier initiative led by Israel's Ministry of Defense. Combined with the $30 million Syrian border demining program, Ondas's subsidiary 4M Defense is winning major government tenders. They also completed the merger of Mistral, expanding their defense prime reach, and acquired Worldview, giving them stratospheric drone and high-altitude platform capabilities. Ondas securing a NATO order for its Iron Drone Raider boosts credibility and revenue potential, signaling strong demand for counter-UAS technology in security markets. NATO, Israel's Ministry of Defense, these aren't speculative customers. And there's more. Ondas established direct access to U.S. Army and Special Operations IDIQ contract vehicles and expanded domestic manufacturing and integration capabilities. IDIQ contracts are the holy grail in defense. They're essentially standing invitations to compete for unlimited military orders. Current price and analyst targets. Ondas currently trades around $9 to $10 per share. Based on 7 Wall Street analysts, the average price target is $20.14, with a high forecast of $25, representing over 100% upside from current levels. With a scalable operating platform and strong financial position, Ondas is well-positioned to capitalize on the multi-year unmanned supercycle and is expected to significantly exceed their 2026 revenue target of $170 to $180 million. They've already blown past that target. Their 2026 outlook is now at least $375 million. The risks. Ondas also runs at a loss currently. They're a growth mode company spending heavily to scale. The unpredictable nature of defense spending and uneven commercial adoption pose significant risks, and their high-cost structure and cash burn rate could require additional fundraising, potentially leading to shareholder dilution. There's also geopolitical risk. A large portion of their contracts involve Israel and NATO-adjacent countries. Any diplomatic shifts could affect deal flow. And the stock has been volatile in 2026, with secondary share offerings putting short-term pressure on the price. 5-year outlook. Autonomous drone warfare and surveillance is not a fad. It's the future of defense and industrial monitoring. With projections of 570% revenue expansion in 2025 and 270% growth in 2026, Ondas is a prime example of an up-and-coming stock delivering dramatic numbers. If Ondas grows into a $1 billion-plus revenue defense and autonomous systems company by 2030, which their trajectory supports, and trades at even 8 to 10x revenue, you're looking at an $8 to $10 billion market cap. That's a potential 2 to 3x from today's price in 5 years, with significant upside if they win large-scale U.S. military programs. Both stocks, SOUND and ONDS, are playing in massive, fast-growing markets. Both have real revenues, real contracts, and real institutional attention. Neither is a sure thing. They're both high-risk, high-reward plays that could reward early investors enormously or test your patience significantly in the short run. If you're looking at a 3 to 5 year horizon and you believe in voice AI and autonomous defense systems, these are two names that deserve a spot on your watch list right now. Do your own research, size your positions carefully, and if this video helped you, smash that like button. It genuinely helps more people find this content. Subscribe for deep dives just like this one. See you in next video. Disclaimer: this is not financial advice. The creator does not hold positions in SOUND or ONDS at time of recording. Always consult a licensed financial advisor before making investment decisions.